I want to invite you to our class today, and today we want to talk about cash books. Cash books. I promise that we will be looking through one cash book, and then we look into how we can be able to reconcile those cash books. So a cash book comes from our cash ledger, of course, which has a debit and a credit side. Of course, we know that our ledgers kama kawaida inakuanga tunachoranga. Let me just pick which is the best pen there. Let me just pick hii red ya mwalimu. So our ledgers normally tulisema inakuanga na date, inakuanga na details, then of course amount. This is on the debit side. Then on the credit side again we have the date, the details, then the amount. So that is how we work on our ledger. So from here, like assuming we have a cash ledger or the cash account where we have all those things, so that is what we derive into to be able to prepare our cash books. So cash books are into three different types. We have the one column cash book. That means it only has one column. There is the two-column cash book that now brings both the cash and the bank columns together. So we again now merge, this is the cash ledger and the bank ledger. So we merge them together. So that forms the two-column cash book. Let me just write it here. Two-column cash book. The two-column cash book. Then after the two-column cash book, of course, as the name suggests, we have a three-column cash book. And so the three-column cash book has three columns now. Let me just type that kwanza column. Yes. So in the three-column cash book, what is happening there is that we have now merged three different ledgers. We have merged the cash ledger, we have merged the bank ledger, then we have merged in fact, four. So we have cash, bank, discount allowed, and discount received. So those are the ledgers that we have merged together to give us the three-column cash book. So let's take an example. Take an example that probably started a business with the capital of around 20,000 in terms of cash. So you'll find ourselves doing the same thing. We have capital there. We started the business with capital, probably 10,000. That is how we make that entry. Let me just put the figures well so that they appear as if they're figures. Then our normal entry, assuming he made some sales, so that means, and he made sales in cash, he got some 5,000, that's what we'll be doing there. And of course, the double entry goes on the sales account. This one, the double entry goes from the capital. Assuming he paid wages by cash around 2,000, then he even paid some travel expense by cash around 1,000. Assuming he did another sales again of around another 2,000. Let's assume he made purchases probably like around 5,000 or 6,000. And then he got some additional cash from a loan from the bank. So he got some loan from the bank, another 100,000. Then he paid, probably he bought furnitures. He bought furnitures by cash, and probably he paid 40,000. So we can balance off this account. So we'll have this account, of course, we have that total there, giving us 117, which we can balance there. Of course, this should also be equivalent to that particular thing there, the 117. If we add these things here, would have gotten 49,000. So our balance carried down equals to this minus 49,000. So that is 68. So that means when you add all this, it gives you 117. So that means our balance, so that is there. So our balance brought forward, itakuwa ni equals to hiyo 68,000. So that is how we work on one column cash book. The one column cash book is the same thing, preparing that cash ledger that we have always been doing. Then what happens when we now bring the two column cash book? And the two column cash book, I've told you now, we are bringing the bank and the cash and the bank ledgers together in one single account. So let me pick up this particular question. There's a question here. Let me just pick it up and bring it down here so that I can, let me put it on the side somewhere here. Let me try reduce this a little bit, then I paste it here. So we have this question. Just picked it up, just reducing it so that I can be able to work on it here. So we have this question that we have been given, and let me just get it right, the entire question. Then we have a good working space. Yeah, so he started up a business with balances brought forward. You can see them there. Cash in hand is 750 and cash at bank is 17,380. So when we start it over here, so we have our balance brought forward. For cash it is 750. For the bank it is 17,380. So let me again have this done well so that we have those figures there. Then let me also do this here like that. So that is what we are. Then on the second, again, we are told he issued a check to KNTC. So he made some payment. So a check to KNTC account, and it's a check there that is 12,160. And you've seen now that goes to the bank column of the two column cash book, because that's a check. On the third, he paid wages in cash. So cash is losing to wages, and it is paid in cash, and the figure there is 170. Then on the fourth there, he received cash from sales. So that means he made some sales, and the sales are coming in cash, and the figure there is 4,800. Then next he deposited cash with the bank. On that fifth, he deposited cash with the bank. So on that day, two things are happening. I wish I would have done the dates here. I think I can still do the dates here. Let me see if I can do a date column there. That would be lovely. So let me have dates here. Then let me also think of doing a date here. Let me just a minute. Let me include, and then I have a date here. Then I change this to remove that color, make it there. Yeah. So let me give them the month, probably assuming these things happened in the month of January. So ile ingine ya kwanza was this should have been January 1st. Then on the KMTC ile alilipa, that should have been January 2nd. Then the other one we paid wages January 3rd. Then now January, okay. Then January 4th, he received cash from sales. So this is January 4th. So on the 5th, we are told he deposited cash with the bank. So on that 5th of January, January 5th, bank is receiving some money from cash. So bank is receiving some money from cash, and the figure there that the bank is receiving from the cash was 4,000. Then on the same day, on January the 5th, cash is sending money out to the bank, and the figure there is 4,000. So you see what we call something that we call a contra entry. What we call a contra entry. In fact, because of that, let me again just insert some column here so that Yeah, that becomes quite interesting. So let me also insert, let me just insert another column here. Yeah, so this, let me just call it, okay. So we have that column, that is another column there. I think I should have now done this. Wacha tu niziweke kwa borders. Yes. So this is what we call a contra entry. So let me just call it contra entry 1, contra entry 1, so that someone can be able to tell. So in that kind of contra entry, you see that cash is reducing by 4,000, but it is reducing to the bank. Bank is gaining 4,000 and it is gaining that from the cash. So that's a contra entry. The next thing we're told after that, January the 5th, is on the 6th, he received a check from S. Bati. So S. Bati paid us, and that is on the January the 6th. And that is money coming into the bank, and the figure there is 8,160. Then on the 7th, he paid wages in cash. So January 7th, he paid wages and in cash, and the figure there is 675. Then what happens? He issued a check for rent again. So on the 8th, January 8th, there was a rent that was paid, and this rent now is paid by check. He issued a check for rent 2,500. Then after 8th is the issue of 9th, he paid transport in cash. So January 9th, we are paying transport in cash, and the figure there for the transport is 295. Then on the 10th, he received a check from B. Wanjala. So he's receiving money, that is January 10th, and this is coming from B. Wanjala. And it is a check. He received a check of B. Wanjala 3117. Then we are told he withdrew cash on the 11th. He withdrew cash from bank to be kept in the office cash box 1,000. So that means cash is getting money 1,000, and this is coming from the bank. But on the same day, this is January 10th, January 11th, yes, this is January 11th. On the same day of January 11th, bank is losing money to cash. So the figure there is 1,000. So this is our contra entry again, number 2. So you would see we have a contra entry 2 here, and this is our contra entry 2. It is the same amount of money, but on different sides of the cash book. So this is on the debit side, the other one is on the credit side. The similar thing. Ile ingine, this was on the debit side, these are the debit side of this one, this was on the credit side, but on the different sides of the accounts. So that is on the 11th. On the 12th, he issued a check for telephone, so he paid the telephone here on the 12th. He paid telephone, akalipa telephone na check, and labda alilipa teleposta by that time 788. On the 13th, we are told he received from M Minor cash and a check of this one. So on the 13th, January 13th, Minor, anaitwa M Minor, paid him money, and paid money twice. He paid money in terms of cash 950, and then akalipa na another ingine a check 2150. Vile unaweza enda kwa super upate uko na mpesa na cash, so unalipa na cash alafu balance ni unalipa na mpesa. So that is what would have happened on that day. Then on the 14th, we are told he paid wages, and he paid wages by cash, and that wages by cash was around 829. And lastly, he paid transport in cash on January 13th. On January 13th, he paid cash. He paid what? By cash transport, and he paid there 263. So when we are balancing our cash books again, because this is a current asset account, we normally expect that the debit sides normally inakwanga more kushinda the credit side. The debit side inakaa more kushinda the credit side. So let's just try it out, we see. So when we add all this, and I add that, that is 7,500. Wacha niweke hizi zikuwe bold. So that is 700 and 7,500. Hii ingine ni 34 something. Hii ingine tuki-add itakuja 60 something, so ni kidogo kwa ile. Hii ingine pia tuki-add, acha nizi-add hapa na hapa juu kidogo. Hiyo nione ki-add hapo, hiyo itakuwa ni 60 something. Hii niki-add inakuja pia something there. So that means our balance brought down or whatever, balance brought down, of course. So hii hapa itakuwa ni that figure there. Hii pia itakuwa ni hii hapa 30 something. So then this figure hapa itakuwa ni this one minus this one, ndio itakuwa hapo. Hii pia itakuwa ni this one minus hii hapa. So utapata these are our balances that have been brought down. Sorry for that. Those are our balances which have been brought down not our tree. So that means our chanitoa hii line ingine hapa, I delete that. That means our balance brought forward, let's assuming hii ilikuwa ni January 31st. So that means on 1st of February 1st, our balance brought forward itakuwa ni cash, this figure 1268, alafu kwa bank itakuja ni hiyo ingine ya 18,359. So that is how we prepare a two column cash book. Iko na pande ya cash na pande ya bank, alafu cash and bank, all of them at the same time. The 3-column cash book, as I had mentioned, also now has 4 accounts brought together: the cash account, the bank account, the discount allowed, and again cash, bank, and then the discount received. The only thing that is now changing from this particular issue here is the issue of on how we are now treating the discount received. Let me look into if I have some example here to work out and see how that can do it for us. Yes, there's one here. So let me just picture this, and that is what I want to share. We have a look at it. That will be lovely to work on. So let me have this here. Let me try reduce it slightly so that I can have I can also reduce our figures here so that will work well. Yes, something that will look good. This will look good, yeah. slightly smaller. So let me play around with it somewhere here, hapa chini. So we are told that of course this one started the balances. Of course we are seeing the balance brought forward for the cash is 625, the bank there is 98.7. So let me just now do here balance brought forward. Balance brought forward for cash is 652. Balance brought here for the bank is 98.47. So those are the figures that we have. Let me just do this so that I also work on them nicely with the decimals. Yeah, so that is fine. Then we are told now the second day on the 17th they paid transport in cash. So they paid transport, and this was paid in cash. The figure is 222. The following day issued a check to KNTC settling some invoice. So they paid KNTC, and then they settled an invoice for 7,500, and then they deducted some cash discount. So this is where now the beauty of the thing lies. So they are settling an invoice of this one, but then they're deducting 2%. They are deducting 2%. They are deducting 2%. So when you look at it, that means they will not pay the entire amount of money, and they settled it. They paid a check. They paid the name of this one. And it was given out. Of course, there's a discount there. There's a discount there that they didn't pay out, and the discount is being received there of 2%. So if they settled it by check, so this is what it means, that they paid, instead of now paying the entire 100%, they paid 98%. So if you do point or 98% times 7,500, you will find that they paid why is that thing what is that 90? Oh, I should have done 98%. Yes, 98% gives us 7,350. So that is what they paid in our bank. So they paid 7,350. Then now the difference is what they received as a discount. So the difference is 7,500 minus what they paid, and so that is what you have there. There's a discount received of 150. Then on the that is on the 18th. Then we are told they sold goods for cash less cash discount. So again now they are doing sales for cash, and the cash is 2,000. Then we are lessing again another discount of 2%. We are lessing another discount of is it 1.5%. So let's work it out here. So that means 1.5% they are receiving from 100, that is 98.5%. So that equals to 98.5% times the figure that is there, that is 2,000. So they are receiving there in cash 1970. Then if you subtract that, the discount allowed is 30 bob. So that is 2,000 minus that. That is 30 bob. Then the next one there, the sold goods, that one we have done. On the 20th, they deposited cash with the bank. So they deposited cash with the bank. So cash is losing. How much is that? 1,500. And then bank is gaining here 1,500. So the bank is gaining this from cash, and cash is paying this to the bank. Cash is paying that to the bank, and that is what we call a contra entry. So probably I could probably now do it here, contra entry 1, and here we have a bank, and then I'm saying that's a contra entry 2. Oh, sorry, 1. It's the same contra entry. If it's on a column, tungeweka pale kwa column, but I avoid hiyo. Then the next question, we are told that they received a check from Jane Dairy, 24.29. This one after deduction of 2% cash discount. They received a check from Jane Dairy after deducting the 29 something from him. This is quite interesting. The other time they were settling an invoice for 7,500, then they were deducting this one. But this one now they're receiving a check from Dairy. It is 929.40 after deducting. So that means they are coming here and we are saying Dairy is giving us a check of 29.40. But he has deducted. This is after. So that means if he deducted if he deducted what? If he deducted 2%, that means 29.40 is 98%. That is what we have received. So we work with that, the way we would do those things in math, that let me just say 29.40 equals to 98%. So 2% itakuwa ngapi? That is what we do. 2940 equals to 98%. So 2% itakuwa ngapi? So we can do it here. So you say equals to 2% times 2940. We normally divide this by, is it 98%? Yes, and then we find that here 98% it is 60 bob. So hapa discount allowed itakuwa ni 60. Discount allowed itakuwa ni 60. So that is what we are saying there. So that is how we get that. So acha ni delete. Then we continue. Paid wages in cash 175. So we have our wages and it is paid in cash 175. Then paid telephone bill in cash 594. So we have telephone paid there of 594. Then we have withdrew cash from the bank to be kept for office use. So he withdrew cash from the bank. So bank is reducing by 750. Cash is gaining by 750. And this cash is coming from 750. That cash is coming from the bank, and this is where we call it contra entry number 2, and this is being sent to cash, and that is contra entry number 2. Yes. Then after that we are told, we are told he withdrew, then he issued a check for 500, this one as part payment for the loan. So he paid a loan and adilipa na check. So that was issued a check of 5,000. He paid a loan to that loan was being paid to ICDC. Then we are told he received a check of this one. He received a check. So again, he received a check of this one from PNDC. So PNDC alituwekea akapata check ya 4950. And we are told it is after. He received a check of this one after deducting of 1% cash discount. So utakuja unasema tu vile tunasemanga. That means 4950 is equals to 99%. So 1% itakuja ngapi? So I think that is what we can do here. So we say equals to 1% times 4950, I think so, divide by 99%. Then you get hiyo inakuwa ni 50 bob. So that is what we pay right over there. Hiyo ni 50 bob. Wacha ni delete sasa. Then that is that. Then we are told he paid by check KNTC. So he paid again by check KNTC. He paid by check. He paid by check to KNTC 200. This one less 2% discount. So if it is less 2% discount, so that means equals 98% times 2,600. So that is 24 something. So if you subtracted 2,600 minus that, utapata ndio hiyo aliweka as discount yake ikakuja hapo 52. Then issued a check for salaries. So he paid salaries again. Tuko na salaries na amelipa na check, and the figure there is 66114. So that is our problem there. Then he sold goods for cash, less that one. So he made some sales, and the sales are now done for cash, 900 less that one. So that is again 98% times the 900. So that is the figure we are having there as 882. So that means the discount is 900 minus that figure for sales, so which is 18 shillings. Then lastly, he paid wages in cash. Akalipa hapa wages in cash. Wages in cash ni how much? 488. 488. So ni wakati ile ya kubalance these figures. We expect pande hii kuwe nyingi. So let me just pick up this. Let me acha niweke na hapa. So our figure there is 42. Acha niziweke hivi. Total zikuwe bolden. Acha niweke underline hapo chini. Sawa sawa. So we have 42. Pande hii ya nini pia tukiongeza itakuja hivi. This one pia tukiongeza inakuja hivi. These ones, acha niweke nipatie some bold figures there. Hiyo niachane na format, but we are saying this one should be, of course now, hata ukiangalia unapata hii ni, sasa bank pia kuna ka challenge, kuna changamoto hapo kidogo. Bank pande hii ni kubwa kushinda, bank pande ya debit credit ni kubwa kushinda the debit. That means there could have been some problem, either bank charge or nini, it's called what, an overdraft, which is why highly what I'm suspecting. So that means hii itashane basi na pande hii, when kwa bank pande hii ndio itakuwa, kwa sababu pande hii ni kubwa, ili itoshane na hiyo pande hiyo ingine. So that is how we'll balance. So that means we'll have two balances. We'll have we'll have two balances. So we have, this is the balance brought down. Zitakuwa mbili on this other side and on this other side also, on that other side also. So kwa cash, let us see how the cash, wacha nipande hii niseme equals to sum ya all these things ya hapa juu yote. Hiyo itakuja ni ngapi? Hiyo sum itakuja ni 20 something. So the difference here, the balance here, itakuja ni this one minus the totals here. So that is the balance that we are having. So that means pande pia, once we are having our balance brought forward, tutakuwa na balance ingine brought forward ya pande hii. So hii tumeona kwa cash ndio itakuwa na balance, and the balance is here 1275. Then for the nini side, wacha niangalie nione how it is looking like. How that is okay. So wacha nitoe that one. I was just using for my own calculations. And then this one, let me just again equals to sum, niangalie hizi totals ni ngapi. So it is that one, then that means the balance ya hapa itakuja ni this one minus this figure here. So that hiyo ndio itakuja 252 2525, sorry. So that means hii balance ya pande hii na kwa bank column itakuja ifike ikae hivyo. Copy and paste. Copy and paste. So hiyo nimemalizana nayo. So ukiangalia sasa, this is our 3-column cash book for this particular problem. Hii problem I think pia nitaiweka, just copy it now, niweke hapa kwa chini so that someone can be able to find it. I'll be sharing this file also with you. I'll share this file, the Excel file yenye iko na easy questions so that you can be able to see them, but meanwhile you can still follow na uziandike pale. So this is how we worked it out to get us our figures at 2-column cash book. So we started with a 1-column cash book, we went to a 2-column cash book, we solved that particular problem, then we went to a 3-column cash book and solved this particular problem. So that is how we solve cash books, from 1 column 2 column and 3 columns. So thank you so much. That marks the end of our discussion today on the issue of Cashbook. Our next discussion will be on bank reconciliation, on how to be able to reconcile bank reconciliation. Thank you so much.